Hey everybody, welcome to the morning market briefing. It's Thursday, January 26th, 2023. Hope you're doing well out there. We think the audio is working. Please let us know if it's not.
How's everybody feel this morning?
Ben, you feeling good?
Yeah, I feel great.
Yeah, me too. I don't know. I've been better. Hand up, guys. I've felt better in my life. Was doing some channel checks on a company that we're interested in, doing some almost opposition research in some regards, understanding the competition of a retailer.
Yeah, our analyst Jason Sieve actually was on the Hedge Week webinar earlier this week talking about using expert networks, and we certainly employed them on that piece of analysis.
Yes, so we were digging in and maybe had a little whiskey. I don't know. Q4 GDP. Let's jump in. Expectation was 2.6%. Atlanta Fed had it at 3.5. Where are we coming, Tom?
So it came in at 2.9, which is slightly hot. But I think there were a lot of indicators that was probably going to be the case. The Fed GDP now is at 3.5%. So my expectation here is that this is probably still a little low. I bet if they actually come in and revise, we'll probably see it come up a little bit just based on the numbers that were available before this number came out. That is a little bit of a pullback from last quarter at 3.2, but still very strong GDP number. The other numbers we're looking at this morning would be core PCE quarter over quarter came in line at 3.9%, down from 4.7. And then to add a little flavor on top, we had an initial jobless claims number come out as well. The expectation was for 205,000 initial jobless claims, and we came in lower at 186. They did revise last month up by 2,000 jobs, which I think is negligible. So I would say, on the two-month rolling, we're probably right about in line. So not a big splash there, but we are seeing a little bit of pain on the bond side today, selling off a few bips on the 10-year. But I think that was probably expected, as long as, if we're getting really good numbers, which means fewer people are getting laid off, stronger GDP, core PCE coming in line. That's all good news, which is, I would say, bad news for rates.
Good news is bad news.
Good news is bad news. Yeah. I mean, it implies that there potentially will be more Fed action.
I would say that GDP number is a little bit higher than it should be.
You think so? Just based on looking through the actual details there?
If net exports added 0.5%, government added almost 0.5%. Personal consumption expenditures, though, personal consumption was only up 2.1%. So that came short of expectations of 2.9. So and that was actually a little bit of a decline from the prior quarter, where it was up 2.3. So we're looking for an acceleration of personal consumption.
What we would say is MasterCard has said that spending has rebounded here in early Q1,
but I mean, it's not a surprise that personal consumption was lower
in Q4. We've received a bunch of retail downgrades as a result.
Yeah, I don't know. I feel like the numbers. We talked, I guess, yesterday about just kind of building this series of shorter data points. These data points on the larger basis as it relates to GDP, even on consumption, I just don't know that they move the needle one way or the other.
Yeah, I would say that
not the way that, like, this GDP report, I feel like is less impactful than like when we were looking in June or in July.
Yeah, and it's not such a blowout number. I mean, we're up from expectations, but not by a ton. I don't think that it changes the Fed's mind, but I don't think it puts them in cut mode.
Yep, I agree.
If anything, I think we'll probably pause. We saw yesterday Bank of Canada raised 25 basis points and indicated that they were going to pause. So as far as I know, that's the first central bank to do so. I believe their rate is right around 4.5% as well. So they've kind of hit the top of like their wait and see. We're probably a little bit behind them in terms of where the Fed is, but I think we're getting to the point where we're starting to reach the peak of restrictive policy. Canada is probably the first one to start. We'll probably have a couple more hikes. I'm sure that the Eurozone will also have a couple hikes, and then we'll probably see where we are in the summer.
So I actually think this is a very weak report. The more I look into it, my estimate of X items on kind of a like-for-like basis is GDP was up 0.9 in Q4. So I actually expect that this is exactly what the Fed wants. You saw inflation declining from 4.7 to 3.9. in that core PCE deflator on a quarter-over-quarter basis, and you've seen GDP, in my estimation, decline as well from Q3 levels. So that's where I would say. I don't know if that'll be the interpretation of the market, but I actually think it was a fairly weak report.
We should start when we get GDP reports. We used to do the patented Ben Nye America's Back Index. We should do the BDP.
Yeah, I thought it's 0.9 down from 2.3 last time, 3.2 last
So is
time.
America back or no? Are we getting this back?
America's.
I think this basically confirms what a lot of the companies have said over the last 3-4 weeks, that November was bad, December was worse. So far, we're cautiously optimistic on what's happened early January.
Cool. Chevron. This is a massive buyback that they announced. They're up 3%, $75 billion with a B buyback. They previously had a $2 billion share repurchase program, share repurchase program authorized dating back to 2019. Now they're buying back $75 billion of their own stock, more than 20% of the market cap. This is insane.
It's crazy, and I feel like I actually looked through the board to see if there were any government people on it. There are not. But it's definitely a little bit of a slap in the face to Biden and kind of to shareholders as well, because at a 1% tax, it's not a lot of money, but it's still in a percentage basis, but it still has $750 million that they're going to be paying the IRS on top of the taxes they already pay. The White House was not happy.
This is an all-time quote.
They had a statement saying, for a company that claimed not too long ago that it was working hard to increase oil production, handing out $75 billion to executives and wealthy shareholders sure is an odd way to show it. That's what the White House said. Chevron reports earnings tomorrow morning. I'm really curious
to see if they respond.
Yeah. Also, Tom, I wonder if you could pull this up. Who are the largest shareholders of Chevron?
Because I'd imagine it's entirely held by 401ks. For
Yes.
the most part.
Give me 2 seconds.
It's an interesting. One, how do I become a wealthy shareholder so that I can get part of that $75 billion?
Man, largest shareholder. This might be a complete shock. Berkshire Hathaway. But not only that, quarter over quarter, they bought 2.3 million shares. Whereas the second two largest, Vanguard and BlackRock, combined sold almost 11 million shares. And then State Street, which I think is Fidelity. Who owns State Street?
State Street is its own. They have Spider ETFs.
Yeah. Spider, yeah. So they sold almost 10 million shares.
I bet they feel like some dum-dums.
Yeah. So you're the classic woke ETF push from BlackRock, Vanguard, actively selling, whereas when everybody hates it, move on in. Warren Buffett coming in for 2.3 million shares in the last quarter.
This is a real black guy for the ESG.
Yeah.
Investing.
So Warren Buffett doesn't care about your politics or how you feel. He's in there for the value.
The real question is, how much did Paul Pelosi buy last quarter? We're gonna find that out.
Yeah, we need to look that one up.
So I think it'll be interesting to see if they kind of exchange bars back and forth. Let's talk earnings. Been a bunch of companies reporting. Diageo getting beat up a little bit. Sherwin-Williams really getting beat up. Gonna get some business from me though in first quarter of 23. What do you see in kind of across the landscape with earnings?
Yeah, so there are a few themes that I kind of broke out based on the earnings reports. There's a theme about deflationary forces. That's where Diageo and Sherwin-Williams fall into, and also Dow Chemical. Dow Chemical's down about 4% this morning. And just going through some of the pricing, and I'll just hit pricing in their plastic segment. So this is their polymer segment, touches basically everything we look at. We just don't consume the products because that probably wouldn't be very good for you. But their pricing has gone from 24% growth in Q1 last year to 14% to -2% and now -9%. Their revenue for Q1 imputes a decline of 26% on a year-over-year basis. So essentially what we're seeing is inventory destocking and weaker pricing. And we're seeing that really across the landscape. We're seeing that at Sherwin-Williams. They see pricing going from up in the 12% range to now in the 3% range in 2023. And then Diageo as well. They see pricing really going from the low double digits to the mid single digits as well. They're seeing, especially in the US, weaker US spirit sales. They did have some good outperformance in Europe and Asia, but by and large, we're seeing destocking and we're seeing significant pricing declines, especially in the manufacturing sector of the economy, which I think ultimately is good.
Yeah.
But for a lot of these companies that have just relied on price increases that are really selling commodity products and should not have these types of price increases on a long-term basis, we're seeing this coming back down to earth. So Sherwin-Williams down 9%, Dow down 4%, Diageo down 6%.
Yeah, it's interesting to see. I mean, kind of the market responded relatively punitively in terms of, you know, the realization that, hey, you can't just push prices through forever, and hey, these things are normalizing. We talked a lot about normalization, I feel like, in the macro, but a lot of that is this theme. Yep, maybe a different application of it. How electric was ServiceNow yesterday?
Yeah, so ServiceNow was good. The CFO had a really bad cold. The CEO Bill McDermott was really trying to
Pump the room up.
Pump the room up a bit. By and large, though, enterprise software is holding up pretty well. ServiceNow is holding up well. IBM is holding up well. So this is all good news for the enterprise software part of the business. IBM CEO actually made a good point. He said, "Look, you've mentioned a wide spectrum from the people you're seeing recently. I think the reason that we are remaining in this optimistic frame of mind is that we have no consumer business." This is coming from IBM. Says that even if our clients may have a consumer business, we don't have that directly. And so IBM holding up a little bit better, ServiceNow holding up a little bit better. People still need to invest in critical infrastructure and technology. And if you have innovation and if you have a way that companies can do things more efficiently and better, you're going to be relatively successful. And ServiceNow and IBM both fit that bill.
Would you echo kind of your sentiment from yesterday and that you touched on earlier? Just general tone is cautious optimism
For those, yeah.
Yeah.
Not for Sherwin-Williams.
Right. Yeah. Tom, any more reaction in bond land?
Just a little bit of a sell-off, not much. We're off maybe 2 or 3 basis points on the 10-year, but it's right across the board. So I haven't looked at WERP. I mean, we're up 1% chance. So we went from a 3% chance of a double hike in February to a 4.5% chance. So pretty unlikely. Not a big move there, at least not at the moment. So futures staying pretty steady.
Cool.
Yeah, just a couple of quick things because I think people are probably interested in these. Tesla is up a lot this morning. Basically reiterated their long-term growth target of 50%. Said right now they're receiving 2 orders for every vehicle they can sell. They're actually increasing the price on the Model Y, which is a little bit in contrast to the narrative that's been going through that they're having to cut prices. Margins are a little bit under pressure, but they have no concern on demand. Elon Musk said in his prepared remarks, thus far in January, we've seen the strongest orders year to date than ever in our history. We currently are seeing orders at almost twice the rate of production. So we think demand will be good despite probably a contraction in the automotive market as a whole. So take that for what you will. He also says that he thinks Twitter is good for his business. Comcast was very similar to Disney. They're really subsidizing their results based on their parks. They're not only losing video subscribers now to the tune of about 500,000 a quarter, but they're also losing internet subscribers, which is not a good scenario for them. Southwest had weak results. They just continue to have problems there. All in all, a little bit of a mixed bag. Depends on where your markets are, depends on how much actual true innovation you have. If you have true innovation, you can push price and people will pay for that. But if you don't, if you're selling plastic, you're down 26%.
Yep. Cool. We'll wrap it up there. We'll be back tomorrow morning at 8:30. Good stuff, Ben. Good stuff, Tom. And we'll talk to you guys in about 24 hours.